Greetings, everybody. This is Jeff Scott, and welcome to this week's edition of my top-down review. Just to give you a quick heads up so you don't have to do 1,000 comments. If you're hearing an echo, it is because I'm doing this in my new house, and it's really big, but it's really barren. There's a lot of walls, a few chairs, and TVs on the wall. A few boxes I have to unload as well. So until we get wall coverings up and drapes, I got a feeling Echo City, as they complain about at work, is here. I titled today, Will the Chop Resolve to the Upside? Notice a question mark. It's 6/6/2021. Again, my name is Jeffrey Scott, and my email address is hgsi.gmail.com. I welcome comments, positive more than negative, but I'll take the negatives as well. And you can put things under the remarks in YouTube. And if you go to the lower right corner of your screen, you might see a gear if you're watching this on YouTube. Please click it and make sure you're watching this at the highest resolution. I do this in 4K, and if you watch it less than 4K, it's going to look kind of bad. Let's get going. I gotta click on this puppy. So as always, this is for educational purposes only. I am a physician. I am not a broker. I have no licenses that would say that I should be telling you what to do. I am independent. I pay for the tools that I use. No one pays me to say good or bad things about them. Trading involves risk. You and your loan are solely responsible for any investment decisions you make. And I often talk about options, and I remind you that options are considered risky by many, including the Options Industry Council, the OIC, and I refer you to their website for more information. I'm not going to spend a whole lot of time here. I've been doing these talks forever, but my style is be your own guru. By that I mean learn from smart people, many of which are on this board. I've been to courses. I started doing a course today with a woman named Jody Samuels on Elliott Wave. But do courses, read books, go to seminars, and then take the best of what you learn and make it your own. And that's what I was taught by my major mentor, Ian Woodward up here, who said, Jeff, I'm not a guru. I'll teach you to be your own guru. Become your own guru. Take control of your trading. What I need on my desert island, besides high-speed internet, you'll always find TradeStation and Thinkorswim running. I use John Person's indicators. I use Dr. K's tools. I use Sager's Q tools, at least on TradeStation. They're not on Metastock. And then during and after hours, HGSI and EdgeRater are my go-to tools for analysis. The website for highgrowstock.com, of which I again say I have no financial relationship, is here. You have a free 30-day trial. Under investing strategies, you'll see hundreds of videos by me and others, including Gil Morales, Ron Brown. They don't even ask for a credit card. As a businessman, I find that cuckoo because I think people are more likely to continue using it if they get a card. But kudos to George Roberts, the proprietor of HGSI, who does it. Stock patterns are cyclical. Where are we? I think we are right here on this shoulder where my arrow is and where this arrow is pointing. Now, the question is, are we at the top of a Darvis Box? And I'll explain what that means in a little while. And are we about to roll over? Or are we about to take another leg up? Hence today's title. Based upon what happens, whether we're in a new uptrend, in which case I'd be more aggressive, if we are sideways in a Darvis Box where I am more conservative, or if we are breaking down, I might be more bearish. That will determine my approach. As I will say later, I'm still more weighted to the longs. When I look at my quick review of sectors from end of day Friday, I see a lot of green. I see red under discretionary, red under utilities, red under real estate. I see a lot of green on technology. I see some green on materials still. You can see where the strength of the market is, and for those who haven't been here, I have each of the S&P sectors and then a lot of the stocks in those sectors underneath, and I look for trends of what's going on. Now let's take a look at this and see if it'll work. I'm actually doing this on my LCD monitor on the wall because it's 4K, not 5K. So first thing is, let's look at the S&P futures right here. What have I been telling you for weeks? I've been saying we've been going nowhere. And look at this. We broke into this box on, looks like April 15th, if I can read well enough. And we have gone sideways ever since. Yes, we had a peak and a valley. We've tracked up as the S&P, the 50-day moving average has caught up to us. We are above the 17, above the 200. So I look at this, and I also notice we're up at a Fibonacci extension as well. We're just struggling at this point. Did we break out on Friday? We set a recent high over multiple days. We still have not taken out the high back here from earlier in May. But that was a pretty strong day on Friday. Again, a nice lineup of the moving averages. Are we about to break out? More about that to follow. I look at the NASDAQ futures. Not as pretty, but not bad. Back to the S&P, notice that we're in a John Person signal. On the NASDAQ futures, we actually got one come in on Friday, which was a flip-flop because we had a sell come in on Thursday. Again, the NASDAQ has also gone nowhere back to the beginning of March or end of March. Again, we've had ups and downs, but we're kind of where we were back here almost 2 months ago. Are we ready to break out? Well, that was a strong day, breaking out of multi-day highs here. Still have not taken out the prior highs, and we'll see which way this resolves. What about the Dow futures? Let me make this the same. Boom. The Dow futures are well above their 1750 and 200, more so than the NASDAQ and more so than the S&P futures. So Dows have done very well. Still have not taken out a prior high either, but bullish looking. And then again, talking about a Darvis box. A Darvis box would be, you can set a high and you can set a low, and you might just call your high in this range. And this markets have basically been in this Darvis box going back through February 3rd. Now, if you feel that your account has been chopping up, well, what do you expect? The market's been chopping up and down. If I look at the VIX stays low, not the lowest it's been, but pretty low, not the all-time low on the one-year chart. And if we look at the dollar, this was causing some problems for me this week, where especially on Thursday when my account sold off pretty hard, dollar had a big move, but on Friday it gave back most of it. Notice it stopped right at the 17-day. So where this dollar goes, I think, is going to be very important. I think the dollar was driven somewhat by what we learned from the employment numbers. The weeklies, not much to say, but you can see even on the weeklies, you're starting again, E-mini futures, NASDAQ, S&P futures, NASDAQ futures, Dow futures, Russell futures, VIX, volatility futures, and the dollar. You can see that on the indexes, they've been sideways for some time. Now, these have become favorites based upon comments and the expected move charts, which, I've said it before, I'll say it again. I am not an inventor. I am a follower. I am a learner. I learn from smart people. I learned this from Don Kaufman of TheoTrade. I don't think this thing is writing him correct, so I may have to play around with this. I think it's a 50-point move this week. That looks a little too wide. You can see, if you look at last week's video, the same thing, and then it tightened up the next day. The important thing is to look backwards at this. And the first thing is, go back here to this date, which is April 12th. And notice the tight range that the E-minis have traded on going back nearly 2 months. Again, chopping around this basic number. We broke out perhaps on Friday. We shall see if this has any meaning. How do I use this? Well, when it's flat, I don't have a whole lot of value. Let's look at the NASDAQ. Here's how I use this chart. The NASDAQ, again, a lot more volatility, not nearly as flat. But if you look at where the NASDAQ was here, right here, this day here, which was also in April, early April, we closed kind of in the same range. So sideways, but with a little bit more movement. This is actually where this thing comes in very useful. Why? Because when we track up to the higher of the expected move, I expect it to come back down. We track down to the lower of the expected move, I expect it to move back up. Now, what I look for is a very positive day. So here we are way below the lower expected move on this day, and then we opened up and traded higher here. I would have set a sort of a buy stop above the high of this day, and if we took that out, I would have gotten back into the market. Again, here we traded to the bottom, we moved up to the top. We stayed around the top until the new week, and this past week we did pretty much absolutely nothing. It's interesting, you can see how the range here on the NASDAQ has tightened up for next week. YMs, similar to the NASDAQs, have pulled back and recovered, pulled back and recovered. Didn't do much this week, you can see here. Again, just looking at the S&P and this week really did nothing. 4 days of trading, very little volatility. The NASDAQ had a big down day on Thursday and came back Friday and closed above it. Russell, strong day on Friday. Look at Thursday, it was mostly a doji on the Russell. The VIX headed up towards the high. Excuse me, the Russell, did I mess up? So the Dow flat, the Russell traded up beginning of the week, came back down close to where it opened, up a little bit, and then the VIX, as you'd expect if the markets did well on Friday, the VIX traded down but stayed within the range. And you have a plus and minus 1 standard deviation of anticipated motion here. So you're going to capture most of the prices within the top and the bottom of the expected range. And then lastly, on the dollar, really ended kind of where the week started. Again, I refer you to TheoTrade Don Kaufman. He's done a bunch of free webinars of late talking about expected moves. Rates trickled down a bit this week. Here's a 10-year in the 30. Falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. As you know, banks like rising rates. AD lines have led the market higher, and now the 2000 took out its descending trend lines. AD lines are strong as the market is near its all-time highs. You can see the AD line of the NYSE at an all-time high, and the only thing that's turned down, hard to see right here, is transports. With rates easing, TLT turned up. Breadth, stocks above the 200 on the left, stocks above the 40 on the right. Not at the highest, but not at the lowest, upward 2/3 bullish, not overbought. This is the 3-month new high, new low, which Sager has now built into Edge. Man, the guy's amazing. Every time I come up with a new thing or I adapt somebody else's, he finds a way to put it into his spreadsheets. So nice. Great job, Sager. If you haven't looked at the Q tools, I love them. I just warn you that if you really love them too, you're going to be forced like me to buy Refinitiv data because it's driven by the Refinitiv, which is the Metastock real-time data platform. 13-week or 3-month new high, new low is getting near overbought, not quite there yet. Daily McClellan, we still have the oscillator and the summation index have not made new highs while the market has continued. We at least broke this downtrending line here, but we're right back at it. On the weekly, again, massive new highs on the S&P and not on the oscillator or summation index. That's called divergence. If we look at an edge rater, buckets, 2/3 of the stocks above the midline of the Bollinger Bands, that's bullish. They're congregating here on the right-hand side, but certainly very few at the top or above the band, so that is bullish, not excessive. I don't see any evidence of a Hindenburg omen on either the NASDAQ or the NYSE. For those who forgot about these are great predictors of when markets get markets get this new level of entropy where the professionals are selling to the amateurs, and it typically precedes a major market sell-off. About 25% of the signals are real. Multiple signals are more important. Each signal gets a little bit of a pullback. It's sort of a built-in of how you get the signal. But there hasn't been a major market correction since World War II that was not preceded by a Hindenburg Omen signal. Notice the new highs on the NYSE are above 10%. NYSE is getting really extended here. Not many new lows. Market tone, mostly green, not totally green. Just use that more qualitative. We'll look at the markets in a few minutes. For me, it was a mixed week. On here, it looks like my holdings were down a bit, down 0.91. Because of the mixtures of shorts and longs and how I use options, I actually was up about 3% on the week. It wasn't a big week one way or the other. My filtered buys and my buys were much better than my ownings. And my portfolio doesn't necessarily look like it did a week ago. Now, I'm sort of confused. I thought the markets were up on the week. I guess if you look at 4 days, the S&P was down a bit. I suspect if I add the 5th day, which would have been the prior Friday, it would have been up. In yellow, some of the Investors Business Daily indexes were down a bit, just like my basic holdings were. If I look at the Edge Rater report, first thing is the high, this is 2%. This is earned versus gain, and it was pretty much flat during the meet. Remember, we throw out the tail, we throw out the head, because there are very few stocks. So no real relationship of ERG and performance. In fact, EPS rank underperformed, yet relative strength rank did well. So what that means, stocks that make no money, that have been outperforming of late with good relative strength, outperformed. Really not much to say on the sheet this week. Sector strength, for the most part, is positive. I think that is healthcare, that was negative. Some of the insurance companies showed up on my short list this week. Oh, by the way, I don't talk much about my shorts because I don't want to drive you to short, but my short list was down over 3% on the week. I like to use Q to understand the markets. So we're looking at 1 month, 10 days, 5 days, 2 days, and 1 day. We're looking at sectors, industry groups, and stocks. Really kind of consistent over these 1 month period of time, where about 70 to 80% of the sectors have been up over the month and over the last day or two, whereas 2/3 of the industries were up 60% on Friday, and we're a little bit over half of the stocks have advanced over the past month. So this is sort of what you get in CHOP. You'll get good days and bad days, but overall it's kind of a neutral pattern. If we look at sector performance, it's not hard to see that over the month, energy has just kicked tail on 8 out of 3 over the last week, hence on these sectors, hence the 73% there. And you can see the laggards were discretionary, healthcare, and communication services over the 5-day period. Does not necessarily reflect what we saw on Friday. On Friday, we were led by information technology, consumer services, and energy. I then looked in those top 3 groups using Q Edge. What were the leading industry groups? I just took the first bunch that were 140 above, so the top of the top. And you can see semiconductors and semiconductor equipment, 2 traditional growth groups that were out of favor, really bounced back on Friday. Is this the beginning of something new? Drillers have been strong for a while. Application software, another thing that was really poor. The higher the number, this is the period of time, the higher performance of that industry group. Down here, I then used the 3 arrows on a much larger list and came up with a series of stocks, including some traditional leaders such as Applied Materials, Qualcomm, that were undervalued with good earnings per share growth. So that might be interesting. AMCX had a very interesting chart. I just don't know if it's getting pulled into the AMC craziness, but another stock that's considered undervalued, good performance with good earnings. Canaries in the coal mine, some of the leaders, really like your portfolio, my portfolio, probably chopping a lot, really for the last 3 months have gone sideways, stuck and held between the 50 and the 200-day moving average. I love to see it break. Now, I don't know if there's divergence here, but relative strength seems to be improving. I think to those of us that are growth stock investors, can-slim investors, we like to see these lead. I think there's a couple of problems here. Tesla feels ugly to me. How does it maintain its multiple when Ford with the Mustang, Audi with its electric cars, and then all the pure electric vehicles coming to town? I owned a Tesla. I loved driving my Tesla. I loved plugging it into my garage. What I didn't love is it felt like my golf cart. It had very little luxury. It was all about acceleration, but not about, you know, there was no, it was fast. Um, One of my neighbors got in a car wreck. I mentioned this before. It's months to get parts. The other problem up here is Amazon, which is just can't go forward. Amazon might be one of those stocks that's at risk if they start doing a minimal tax. At some point, they got to eat up all their losses, but they've really been eating up losses against their tax burden. If we look at news for the week, news is really important now. Why did we have such a great day on Friday? Because we had a miss on employment, but still good employment numbers. So that made the inflation hawks happy. If we look at the news this week, we got some inventories, we got some claims, we got core CPI for a May period. I think that's going to be interesting because if this thing runs really hot, it's going to start to make people look again at the issue of it's only a temporary growth in inflation. Earnings this week. That's Marvell, the healthcare or the technology, but one of the Marvells, Coupa software. Looking through this, I see some Academy Sports has been a mover. We've got Casey's General Stores, Lovesac. I've got some of that. GameStop, I don't own that, but it should be interesting to hear what they have to say. Restoration Hardware, a stock I've been in and out of. Signet Jewelers. So not a gigantic week for earnings, but there's still plenty. And as I said here, it is a judgment call to hold stocks over earnings dates. It's bad judgment to not know your stock's earnings day schedule. I have a flub here. This is actually market. Just go Market Watch, calendar in Google. This will pop up. It's not Bloomberg, my bad. Market thoughts. We finished strong on the week on Friday. And you could see it says here these were up for the week. And I wonder if that's for 5 days and not looking at the 4-day week. Indices have traded sideways for the last 6 weeks, chopping up many accounts. We're at the top of the box, and we'll go over that in a few minutes. So you have to question whether we get a breakout to new highs or we continue lower. News will continue to test the bottom of the box again. News will continue to drive the markets with eye on inflation. Surprises to the upside are likely to bring on further talk of QE tapering. I had 2 great days in my portfolio, Tuesday and Friday. One bad day on Thursday, which took out Tuesday. Still ended up positive. Challenging environment because of the chop. Someday we'll look at this as either a pause before continuing bull, or perhaps it's the first phase of rolling over. I learned a long time to trade the market that I see, not the market that I want to see. I'm mostly long, but I keep keeping an eye on the exits on my radar. Breakout above the top of the boxes would be great, but look at Amazon. A failure could be a bearish sign. I'm up about 40% on my original capital. Now my original capital is down huge because I took money out from a house, and I just don't know how to do that for calculations. So I'm up over $1 million. I started with 3 million or so in my original account, took out over 2.5 million to pay for this house. And you could see that might, I put the wrong ones in. Some of the things, you know, I meant to put into this, my bad. In briefing.com, I put the wrong stats in. So Russell is up 15%, the Dow's up 13.6, the S&P's up 12.6, Nasdaq's up 7.2. So I'm pretty happy with my performance. I'll be the first to admit I've been distracted because of building a house, buying a house, and selling a house. So 3 different houses at the same time is a pain in the Fortunately, I could say my wife's ass, excuse my French, because I'm married to a goddess. She does everything, and I basically work and trade. Very quickly, I like to look at this view in TradeStation, which incorporates some of my favorite things. If I look at the E-mini futures, uh, 6 things or so here. Number one, we are in a John Person buy. That's that green arrow. Number two, we're in a Dr. K. Lagar RSI buy. That's that blue, or you can see it down here. Number three, you can see how both of these led to a big rise. We have a green bar on the daily. That is bullish. That's an Alexander Elder impulse indicator. Green means I can go long or I can hold. I shouldn't be shorting. Red means I should short or I should hold. I shouldn't be buying new positions. And blue is neutral. Here is a weekly uptrend in blue and a monthly uptrend in green. These red dots are signs of MACD divergence. Why? I haven't set up a higher high yet, but look at how high over on this left-hand side right here, the MACD histogram was. And with a higher high here and continuing up here, we can't even get much above the midline. So that suggests to me that some of the strength behind this rally might be waning, and that's a clear divergence. To make my life easier, Alexander Elder impulse, divergence dots pop up for that, so I don't have to even look at the histogram. As I continue to look at things, and I look down here, I see the weekly bongo, which is the middle set of green dots, has been in a buy signal going back since beginning in March. That's been a good signal there. Intermittently, the dailies go red in short-term pullbacks. The daily turned green on Friday. And the one here on the bottom is my monthly bongo. These are available in HGSI as standard indicators. The other thing that I really like to look at here is the high jump, because I know when it starts showing 95 in blue, 93 in blue, that I'm going to reverse. I'm at 64. So I see a bullish picture here. The divergence tells me at some point we're going to roll over. It doesn't have to be tomorrow. Let's look at the Dow futures. Very quickly, same story. It is a 69%. And I look at the Russell futures. Same story, except it's blue. It's at 38%. And then lastly, the NASDAQ futures, 28%. The NASDAQ had a new buy come in on Friday. It's still in a buy from back here on the Lagar RSI. So hard for me not to feel a little bit bullish here based upon the futures. Now, if I go into Major Markets Plus, make sure I don't have a filter on, and hit Warehouse View, I pop up all those groups here, which are the major industry groups or ETFs or market ETFs. I like looking at this at the top-down view, which is mostly going to look at 5 days, not 1 day. Well, it's going to look at 5 days, 1 day, and 21 days. I guess the biggest weight rather is on 1 day. My bad. I'm just curious. Let's look at the weekly bar on the S&P 500. So it's up 0.61. I just don't know if that's considering 5 days or 4 days, and why my other numbers were wrong. I'll have to go back and play with that and check it. Doesn't seem to make sense here. Let me find the S&P 500. .8 for 5 days, 0.6. So it must be up 0.6. So I must have done something wrong, and maybe it had to do with the open to the close. I'll take a look at that because that doesn't sound right to me either. I don't think it's a big deal, to be honest. So what was working the most this week? Biotech. I've been talking about this for a couple of weeks because of the ASCO meetings. I thought it might make a run, ASCO being the large cancer meetings. NASDAQ, that's good if you're a growth stock investor. FANG was up here on this as well. The laggards were VIX, transports, treasuries, Bitcoin, gold miners. Okay, let's take a look. Here is the S&P 500. Let's make this bigger. So what do I see here? I see a little bit less, about a year, excuse me. I see a nice lower left, upper right. I see the weekly bondo, as we know, is in green. Here are those Hindenburg omens that fired earlier this year and previously, and you can see there's often a correction that occurs. Here is the high jump where I'm not at the top. Calculated here, I'm at 55.2. This is looking at the cash, not at the futures. I have in green a 17-day simple, in blue a 50, in red a 200, dash blue is 100. This is a 500-day and this is a 1,000-day moving average. These green and red dots are a PSAR, Wilder PSAR. These red flags are a person sell. If you see a green flag, it's a person buy. And it's not always exactly the same in the different platforms, as the calculations may be off a little bit from one or the other. So I'm looking at the S&P. The bongo's good. High jump's not a problem. I had a mobile breakout, which is bullish. Still, at least on the cash market, showing a person sell signal from the day before. My guess is that will go quickly if the market trades up. Weekly high closed doji, meaning we closed above the high of the doji bar within two bars ago. So that's a bullish sign. Not much to say here except the lower left, upper right. Look at the weekly. Very strong markets. Are we still, and this is really the question. And we won't know the answer. I got to find things on my other monitor. I hate when I do that. All right. We won't know for a while. Let me make this black. But there's probably somewhere here I'm going to find what I want. There is a box. We are at the top of that box. For me to be bullish, we got to break above that box. If I want to be bearish, we're at the perfect place to break down here. So what I'm going to be looking for on Monday, I'm going to look for, do I get a breakout? And the most bullish thing to me would be a retest and go higher. That would be awesome. Are we going to break down and come back and just chop, which is what we've been doing, which is most likely? And then probably the least likely scenario, we're going to come down and test down here. Boy, will that hurt. Even testing just the 50-day moving average is going to be painful. So those are the scenarios I'm going to watch for. Obviously, as a bull, I'm hoping to see a breakout above this line. Let's take a look at the NASDAQ, or excuse me, the Dow futures. Again, does this not look like it's breaking out of a squeeze? More bullish than bearish. But the same thing applies, except I probably set my box here, not at the shooting star top. And again, that's very, very, what's the word I would use? Arbitrary. But if my box is here, where am I? Just like the S&P, I'm at the top of the box. Let's look at the Russell 2000. I mean, I talk about this every week because this is like so important. We are in the box. We have room to go to the top, but we've been in a box for a long time. It's funny the way things look. It almost looks like it's wider here than here. And that's just be my monitor effects because it's not wider. It's the same. More choppiness here than the other indexes. And then lastly, the NASDAQ composite. Well, the good news is it's probably not in, I gotta click that off. NASDAQ's not at the top of the box. So it's really the Dow and the spider that really have to make a decision what we're going to do. And again, would I be bullish or bearish here? Gone sideways, the market catcher's gotten more bullish. I'm bullish here, okay? I'm bullish tepidly. I'll be more bullish if we break out of the boxes. And, you know, we've been in this box forever. And what's the most likely thing to happen? Most likely probably stay in the box. But I'm looking for a breakout. Let's look at some of the components we might look at. Let's look at the IBD50, which probably reflects your portfolio and probably reflects a lot of mine. You know, we are in a box that's getting narrower or narrower. I don't think this is going to draw perfectly, but let's just look at this. I'm no artist, as people who've been here know. I mean, are we working towards this? When I look at some of the indexes in the futures, it really sets up well in these patterns. This is an ETF. We're chopping around. We are in the midst of a trading range. It'll be interesting to see. I don't think I'll make big money on growth until the IBD 50 breaks out. If I look at the microsector FANGs, cleaner FANG list, looks kind of a nice place for a launch, doesn't it? FNGS, just out of curiosity. Was it FNGS or U? Let's see. Yeah, you can see the resistance here on the Q chart on the daily. That's the concern. And a lot of things, again, here's a John Person buy signal on the daily and the weekly, which I love to see. But we're right at automatic trend line resistance. All right, so that's the FANGs. What about biotech? I've been watching, trading a little bit of biotech. And biotech still hasn't done anything, although look at Friday. Broke out above the 200. Mobile breakout from a squeeze. Pocket pivots, kahunas, John Person buy signal. I wouldn't let it get below the 200-day moving average. Probably wouldn't let it get below the 50. If I look at semiconductors, show, you know, look close, like they're breaking out. Look at the improvement in market catcher, John Person buy, and mobile breakout. Really look improved compared to where they've been. That's got to be bullish for the overall market. Sort of aligns greatly with some of Sagar's tools. If we look very quickly at the ARC, this is tech sitting right around the 50. Innovation failed at the 50. Genomics broken down. ARC Innovation broken down below 200. Israel right at the 50. Next Generation Internet's also broken down. You know, Kathy Wood has to invest within a theme. Those themes haven't been working. And Bitcoin is just bouncing around the 200-day moving average. If this was a stock, would you be long or short? I'd probably be out of it. But this would be a good place to start thinking about entering a position if you're a bottom fisher. But I'm not in it. It's just chopping in a new range when I look at it. If I go and I look at industry groups, hit number 7, hit the warehouse view, you can see I've got 174. And if I go to 2-day up, I can see that I have 70 to the upside, led by semiconductors. 2-day down, I have just 3. Brokers, managed care, which look weak, and cement, which is interesting considering the soon-to-be Biden infrastructure bill, if he can ever get it passed. Intermediate term down, I got 19, and an intermediate term up, I have 78. So I've got to look at the bulls this week, so let's look at the 2-day up. So because of time, I'm only going to go through the first few and maybe a couple of special ones. If I highlight semiconductors and right-click on it, then left-click on Change to Index Group, I list the stocks. Now, last week on my buy list was NVIDIA. NVIDIA has broken out. According to the high jump bar, it's not too late to buy it. I look at it, I can't buy something this extended, but NVIDIA was a good buy last week. 1, 2, 3, 4, 5. So NVIDIA was right here, I believe, or it was just starting its run last week. So NVIDIA was a good one on my buy list. What else do we got here? Semi leads No. Moses, don't know this company from Adam. Not vouching for anything, even if I did. Doesn't make any money. $1 million of revenue. It's kind of a small fry. Trades a big volume. It's moving. Beautiful chart breaking out here. Just don't know anything about it. AMD struggling to get above the 200. Broadcom broke above. This is on that list of stocks from Sagar's tools. Let's see. I rebuilt it all, so I can't show that to you. All right, Broadcom looks interesting. And then we get the index. Let's go back. Commercial vehicles. I actually like Cummins better. Workhorse is trying to get a mail contract that got awarded to somebody else, and then they reopened the contract. Electric vehicles, not a good looking chart for me. Packer looks very interesting. Sideways charts broke, sideways looking chart. A breakout out of a squeeze with a person buy, pocket pivot, kahuna. Look at sideways movement. Look at the improvement in market catcher relative strength. Look at the earnings per share growth, pays a 2.1% dividend. Nothing wrong with that stock from my perspective. Not going to be a fast mover, but probably going higher. Cummins, very much the same story, maybe better earnings per share growth. 2% dividend, sideways move, took out a chandelier stop on Friday. So I like both of those more than I like the first one. Automobile indexes. Are you long or are you short Tesla here? So let me just make this a little bit bigger for you. Man, it's below a chandelier stop. It failed at it here. I'd be short Tesla. Now, takes out the 50, I'd be unshort Tesla. But do I think 6 months from now Tesla's higher or lower? I think Tesla's going lower. And that will have severe implications for this market. Right now, I got to trade what I have. It had a big update on Friday. I probably would not short it until it took out Thursday's low. But when I look at this, failure at the 200-day moving average, and just got back up to it on Friday, I think Tesla is a risk. And Tesla, I think, is a risk to the whole market. Would you rather own now Tesla or Ford? Ford took out the chandelier stop here. It has had almost a 15-degree, well, this is 90, 75-degree run up. Look at it on the weekly, 3 big weeks in a row. Tesla's selling their Mustang faster than they can build their electric vehicle. And GM also breaking out. I just think that these old auto manufacturers are going to start to compete for the dollar that Tesla gets. And Tesla, maybe the Chinese government to protect NIO, which looks like it might be starting to move, as Tesla's been sort of pushed out of, their sales are dropping in China. Application software, DocuSign, great day on Friday, took out its chandelier stop, it's 200 at 17-day, 50-day moving average. Its relative strength rank is still low, but Bible gap up, mobile breakout, person buy, kahuna. I think DocuSign looks interesting here. I wouldn't buy it unless it took out the high of the day on Friday. Why? Because what's the most likely thing that's going to happen? Most likely thing is you're going to get an inside bar, or this thing's going to pull back some because of the move on Friday. So I don't want to buy something unless it shows that it's continuing to go higher. Now, of course, the problem with my hypothesis and my approach is it could gap up and then pull back, and that happens to me all the time. So I guess I could put a don't look at it until 11 o'clock rule. Another one I like is MongoDB. Has not run as much. Also Bible gap up. Earnings are out. Mobile breakout. New John person buy signal, kahuna. Sideways move, improving relative strength. Also on the weekly, a high close doji on this bar here within 3 weeks. Took out the high. It's actually been in a high close doji the last couple of weeks. I like MongoDB. I don't love their earnings per share growth. Doesn't seem to affect it. Zoom. Now very similar looking chart at first, but look at the difference here. This one is above its 200, above its chandelier, just below its, is that the 100-day moving average? And then if we look at Zoom, it's below the 200. So big difference to me. I like MongoDB better. The 9 is one of these crypto miners like Riot, MicroStrategy, and Mara Patent Group. They popped because they bought some green energy miners. Okay, Salesforce.com had a pop on Friday. I'm still long that. I'm interested in it here. I'm going to continue to hold my position. They've pretty much been in a box ever since buying Slack. Nuances of takeout. Don't know much about InvestNet, EMV, but it had a Bible gap up this week on Friday as well. Bunch of Bible backups as it makes me pay attention. Communication sector, Apple. You want to talk about a box. Look at it on the weekly. This is still December. And we touched that December high or December close. So Apple is clearly in a box as well. It had a good day on Friday. Is this the beginning of something in Apple? Boy, it hasn't proved that to me yet. Sienna, Bible gap up on Thursday, continued up Friday after earnings. Cisco, an old name. This is look like to the 50, gap up, sideways to the 50, move up, pull back to the 50 with a buy signal kahuna on Friday. I think Cisco looks interesting here as well. Renewable energy, these have been beaten up. AM, American Superconductor, nice day on Friday. A kahuna, a person buy, a mobile breakout out of a squeeze, big reversal on the weekly chart. Probably a compelling story just to look at this. I would look at the news. God only knows what window this is going to open up on, but let's see. I'll find it. Yep, over here. Let me pull it over. Did it have earnings? Because fourth quarter. Good earnings. Now, don't know if that will go to the whole group. I've always been intrigued by this stock. I'd like to see it take out the chandelier stock before I got engaged, but a mobile breakout from a squeeze and a pocket pivot. Two recent kahunas, DACO New Energy, but I have an affliction for drugs with great earnings per share growth, and it doesn't matter how great they are if they miss them, the stock plummets. I told her I wouldn't go through 10. This is 7. We'll stop at this one. Change index group. Moderna, the stock that I just have a hard time buying and holding. I like to buy it on pullbacks. It's broken out here. God, these don't even look like regular bars. They look more like Renko charts. Crazy. All-time high. My only problem with Moderna, $82 billion market cap. It just seems a little crazy, but maybe they're going to cure cancer too. There's talk about that with their mRNA viruses. It's got to be at resistance here. I'm not sure I'd be chasing it. What a monster. Novavax, this is one that has not had their vaccine approved yet. And I've got a special one to show you today if I don't forget. Market cap on Novavax, 13 billion. Still a high market cap when you consider no approvals yet. Oh, they have some revenue. They must have something approved in other disease states. Biogen IDEC. This is a big kahuna of biotech. Market cap is 43 billion. I just want you to look at that. How could Biogen IDEC, one of the grand dames of biotech, have a lower market cap than Moderna? I think I'd take long-term Biogen IDEC. But all that said, maybe there's a mistake here because I can't even believe its market cap is that low. Just look at that again, make sure I wasn't misreading that. Market cap 43,000 million, that's 43 billion. All right. Why do I think this is interesting? You notice that it's been in a sideways move since the beginning of the year. They've got a drug for Alzheimer's likely to get approved this year. What do you think that does to the price? I'm just going to leave it at that. I think this is one to buy some and put away. I am for that reason. Didn't go to Biogen IDEC. All right. Let me show you some of the stocks that I like this week because we're getting at the 51 minutes and I didn't want to go very long this week. I got too many things going on with my move here. So let me get this back up to the top. Take a look at my buy watch. Now, my buy watch is a watch list. It is not a buy list. There's a very good chance that I'm not going to buy anything this week. And a lot of these are story stocks that there's a story around, and whether I buy them or sell them are related to how the story plays out. So if we break down where they come from, I've got quite a few biotechs, so I may look at a couple of those, and I got a bunch of semiconductors. So how do I get this list? For those that are new, let me just tell you what I do. I'm a little bit of a crazy person. I create a bunch of lists in HGSI. Some are the scans that are done as part of smart groups. Some of them come from investorsbusinessdaily.com, investors.com. Some I get in the emails from other people. Some I get out of HGSI, like Perfect Speculator. Some I get out of MarketSmith. I end up, beyond the HGSI scans, I end up with a lot of lists of lists. So I end up with a bunch of scans or lists. I have a macro that strips the stocks out of each of those lists and puts them into a Word file. I then import these files into HGSI. I keep some lists separate, but then I create what I call my consolidated buys list, which include, and there's also TradeStation scans, Thinkorswim scans. Like I said, I'm a little bit anal. There were 1,700 stocks. Now, then I put a price and volume and take out the ETFs, and I ended up with 1,029. I then looked at every one of those 1,029, and I found stocks that I was interested in. Let me tell you what I'm not finding. I'm not looking for the best stock right now that's done the best. Why? Because I'll show you are stocks that look like NVIDIA that are going to the moon that are too late to buy. This is a problem that I keep forgetting. I don't usually duplicate stocks that I already own. So it's possible there might be stocks that I already own that look good that I forgot to put into this list. That's bad. There might be stocks that are ugly right now that I think might be getting close to a change. So I'll show you one of those. I had a big position in Starbucks. I bought 100 calls when it was cheap. I sold the 100 calls. I bought it as it took up off the 50, okay? I had a mobile breakout, pocket pivot, kahunas, person buy signal, and look at the fundamentals on this stock. I ran it up. It then had double, triple tops and it failed. Where's it sitting right now? Sitting on the 50. Am I going to buy it on Monday just because it's looking good? Heck no. I'm going to send an alert in one of my programs that says if it trades above X, go look at Starbulk and decide if you want to buy it. Or in Thinkorswim, I could do a conditional order. And by that, I mean so I could look at, say, a August, and let's just look at a straight call. I'm going to make my life easy here. And I'm going to look at it at the money, say it's 18. All right, so I want to buy an 18 call. I'm not saying that I'm buying it at that price. I'm just using this for an argument's sake. There's a little gear here. Well, it's not opening up, Jeffrey. Oh, it's opening up on my other monitor. Call me dumb, please. So I want to buy limit price, day, but I don't want to submit it I'm going to put it in now, but I want it to trigger. So let me get this here. All right. I want the mark, so the price, to go greater than or equal to, and then I can go up here, what was the high of the day? $19. And I want to buy how many? 10 calls, lower the price a little bit. 250, save. Now, it says here, we go to this sheet. Oh, what did I do wrong? I have to confirm and send. So, buy 10, August 21 calls, 18 strike price, $2.50 limit, and it's going to require what I said. So now let's go over here. It has to trade above 1905. So what I just did is I said I might want to buy more of that stock, but I'm only interested if it trades above my price. So now I can forget about it. The other thing I can do is I can take stocks in my watch list. Whoops, wrong list. And I could be running them against a lot of different tools that I use and looking for these things to line up and have multiple fire at the same time. Look at Biogen. My vantage point, like indicator went positive. The 1 day, this is a day trading momentum indicator went positive. Kahuna, high close doji, pocket pivot, viable gap up, daily RSI went positive. That's what I like to see, a bunch of things lining up. So if you look at this list, then the one I wanted to point out, this is a flyer. Here is a stock that has my favorite pattern to not buy. All stocks that get crazed run up and come back. It had a person buy signal. Look at the strength and relative strength off the bottom. It had a pocket pivot on Friday. Why am I interested in this little crappy stock? Because they have an oral treatment for COVID that you would take for 5 days after being exposed to or coming down with symptoms. And Roche, which has a drug called Tamiflu, has given them a big investment. Now, it's a cheap stock. I've seen it was up in the 90s. I've looked at the data. The data looks interesting. They're starting a big trial, which will take a little while. But if you think COVID's gone because we have a vaccine, no. Deaths from COVID are probably markedly reduced, but I think COVID's here. So here is I hate the pattern, but at least I'm buying it out of a base, one that I might watch for when it starts to move. We talked about, I'm just looking through my list, DocuSign and MongoDB. Banks, banks are strong if rates go up. If we have inflation, rates go up. So here's kind of a cup and a handle and maybe a breakout. A Bank of the Ozarks, mobile breakout from a squeeze, person buy, pocket pivot, and a kahuna. Arrowhead Farm, I know my neighbor, I don't know if she still has it or not. It pulled back, bouncing around kind of like the IBB is, and it had a person buy a pocket, a kahuna, and a mobile breakout on Friday. BioNTech is another one of these COVID. They're in partnerships with Pfizer. 56 billion market cap. It's just unbelievable with the market caps on these. Another cheap biotech I highlighted last week. Maybe it's time to look at this as PDSB. They have a bunch of immuno-oncology assets. It's a relatively cheap stock that's been breaking out for the last 3 weeks. Yes, it's run a lot. If the drugs are real, it's still a cheap stock, but be prepared to hold it for a long time. Meritor is another one of these commercial vehicles. This has pulled down more than Cummins and PACCAR, but 2 kahunas in the last 5 days, pocket pivot, nice looking person market catcher with some bullish convergence, mobile breakout from a squeeze, now about to take out the 50, no dividend. Some of the defense stocks looked interesting. Bank of America, what a leader. I used to own a lot of Bank of America, and then it sold off hard with the market rollover last year. It's now taken those highs out. If rates go higher, it goes higher. If the market rolls over and rates drop and bonds start going up, I might be exiting my Bank of America position, which I retook near the recent bottom. What else? OVV is another oil exploration production. There's a lot of these. I own several of them. Energy is crazy right now. At some point, it's going to stop going up. I've seen some people predict 100 of oil. This is a small producer. Look at the earnings per share growth. The stock has to go higher if it makes those numbers. I had a couple other ones there. Let's see where I get. Here was an inexpensive oil and gas services, Centennial. Another oil and gas stock I like is Callon Petroleum. Breaking out here on Monday, took out under demand. Look at the earnings per share growth. And if you look at it in Market Smith, this isn't a two quarter growth period. All of these are going to do what oil does. If oil goes up, they will do well. I think on that note, I've shared with you, Keysight's another one. They're a 5G play. Looks like it wants to break out as well. So yes, I use tools. During the week, I'll have my Thinkorswim on, and I'll have it on with my watch list. I'll have my TradeStation on with my sonar or radar screen. But on the weekend, I look at charts. Those are some of the charts that I like. I think the most important question is, and I'm so glad that my neighbor actually said that to me, is what is the market going to do? And each market could be different. Look at the NASDAQ, we're sort of in the middle of this range. A breakout of the box on the S&P and Dow have got to be a big positive. Now, I did mention a couple of times where I was disappointed by Amazon. So let's look at Amazon and we'll say goodbye. Oh, where's my box? Here it is. Amazon, and this is a box that goes back over a year. And Amazon teased me and traded up sideways for 2 weeks, broke out of the box here. This was from an earlier presentation, and it had a reversal right back into the box. If I look at Tesla one more time, Tesla looks worse, does not look great to me. Yeah, if it breaks and gets above this 50, I'll be a bull again. But right now it's struggling at its 200. If Tesla and Amazon don't function, I'm not sure the NASDAQ 100 is going to take off and go to new highs very quickly. On that note, have a great week. I don't know what time this will get up, but I'll probably get back to normal next week. Oops, I'll be traveling next week, but I think I'll have time to do this. Trade safe. Don't have to trade often. Have a great week, and goodbye.